Bitcoin hovering at a key level here, trying to break from a W pattern, which I shared with you guys yesterday. If we break this level, the breakout on Bitcoin could be epic. We've also got a key inflation reading out very, very shortly, plus an update on the SEC's case versus Coinbase, plus MicroStrategy buying some more Bitcoin. Loads to get into here in this video. Let's jump straight in here to the hourly chart. And as always, guys, if you're going to trade any of these moves which I'm trading, Ijaz.uk/Bybit to trade along with me. As you can see here, we spoke about this double bottom pattern holding support at 30. We did get rejected yesterday, but we held, importantly, a higher low. Okay, so now you can look at this almost as like an Adam and Eve pattern, right? You can look at this as Adam and Eve or a cup and handle pattern going back to the neckline. Can we now break? It may take a few times. We may need to come back down again. As long as we uptrend here and we can use that to break, this will set us up for a W pattern with the whole intention of this W pattern to get us above this peak. We need to break that peak there at 31,400. If you look a couple of candlesticks ago, we had a crazy wick on this candle taking us to 31,200. We've got to get fully up here to create a higher high above this high, and then the upwards movement on Bitcoin will continue. So there's plenty of time now for Bitcoin to start breaking this level, showing strength, breaking through this important 30,800 resistance and the peak here, and then moving onwards. And we've got a lot of data now supporting why there is such a bullish stance here on Bitcoin. I mean, we've spoken to death about the spot ETFs and how many people have refiled for their ETFs. If the BlackRock one can get cleared, you expect all the other ones to clear through as well. But you're starting to see very, very bullish intent from the US market. And this is what's hugely ironic right now. US investors are driving Bitcoin price rally as institutional demand rises. If you start off this year, you could not write this script. And I said it, if you go back in my videos, when the SEC were coming out to do choke point and really trying to suffocate crypto to start off this year, they were using the FTX situation as a guise, even though I think Sam Bankman-Fried was their plant, right? But they used that as the guise to crack down on crypto. They needed an excuse, right? They needed a false flag. So they come out, guns blazing, to start off the year, SEC leading the charge, fining Kraken, dealing with Paxos, closing down BUSD, hitting Coinbase with the lawsuit, hitting Binance with a lawsuit, and then US is now contributing to this insane rally. If you take a look here, look at this. US investors have been piling into Bitcoin as institutional activity accelerated, driving the recent rally of the largest cryptocurrency. And so it's ironic that once BlackRock filed their ETF, Fidelity tried to then do their TradFi takeover, you're seeing a lot more money coming to Bitcoin. So it's counterintuitive for the SEC. It's counterproductive, for them, right? They're trying to shut down crypto, but really that money's flowing in. Now, there is a bigger psyop you can think about, and I did make a video, which I'll link up here, on why I'm concerned about the BlackRock ETF, why I'm concerned about this TradFi takeover, because I don't fully trust it. Now, some people are saying it doesn't matter, right? As long as somebody's there to grow the market and help the market grow. I'm in the middle. Right? And the way I want this to be is, and the way I think any rational person in the crypto space will want this to be, is you want TradFi and the big institutions to come into crypto. You want regulation to come into crypto, but you don't want overreaching. You do not want the SEC controlling everything around crypto and overreaching, and you do not want TradFi coming in and controlling the whole supply and dictating the market, dumping it when they want, pumping it when they want, because then we're no different to the TradFi market. I will operate just like the TradFi markets if they control the lion's share of it. So I share my breakdown here in this video. Make sure you go watch that. But also, there's been a very important update in the SEC case. Right? We spoke about this yesterday as well. They did something really creative, Coinbase, which was they filed their motion 40 days prior to the deadline, and that's now forced the hand of the SEC to open their defense on July the 13th. That gives them only 13 days, of which how many are working days? Not a lot, to now get in front of the judge and file their defense. Very good work here by Coinbase. We're going to keep giving you the updates on this, right? This is going to be an ongoing situation, and we've all got to back Brian Armstrong and Coinbase because they've got to go and put the SEC back in their box, and that's going to be really, really important. Now, of course, you need to understand there's a few narratives that are going to play out. Every time this SEC case comes out, you're going to start to see altcoins suffer certain ones, and you're going to see other altcoins start to pump, and you need to be very, very wary of that trend. Now, one of the things I've mentioned in previous videos is watch out for the forks, right? Because if you look at what the SEC is doing, they're saying Bitcoin is fine. They didn't speak about Ethereum. And then Fidelity partnered with Citadel to launch EDX Markets, which is like a TradFi exchange. And they've got a certain number of cryptos on there, right? They've got Bitcoin Cash, they've got Litecoin, those kind of coins. And that is exactly why you're seeing these types of proof of work forks doing well. right? Satoshi's vision here just behind my head. Let's see if I can move me out of the way. Just there, up 14% today. Litecoin, 18% today, right? You're seeing Bitcoin Cash up here, 30%. So you're starting to see a trend popping off here. So watch for these narratives, particularly as and when you get a to and fro in the legal case. So if you're a trader, take advantage of that, right? If you're going to get 30% spot volatility in a day, of course you want to take advantage of that, right? If you're experienced and you know what you're doing. Again, ijaz.uk/Bybit. If you want to trade any of these, right? Because there's a lot of volatility. Why would you not want to take advantage of 30% spot on some of these coins moving in a single day? When we jump then back into the charts, what we then want to look for is this clear breakout, which we spoke about. Breaking that higher high is going to be really important. And then when I come into the 4-hourly chart, everything starts to make sense. Because when you bring out the 4-hourly chart with the EMA ribbon, what do you see happen? We had a crazy extended move. We moved sideways for a period of time, right? From 21st of June, we pretty much spent all of the rest of the period, the 10 days here, moving to the side, moving into our EMA ribbon. This is the best type of consolidation. A consolidation is either you staying sideways and consolidating in a range like we've just done, or even a little bit of a pullback, right? Just consolidate the price, maybe go into a falling wedge, retrace a little bit, come down to 29,000. So far, Bitcoin hasn't needed to do that. It didn't do this, right? It didn't have this move, come back down here into 29, bounce from the EMA ribbon there, and then go. No, it just consolidated sideways. It let the EMA ribbon come to it. And that's a really bullish intent here from Bitcoin. It shows, like I've just shared with you in the article, that money is flowing into crypto. The confidence is coming back into crypto, particularly due to the TradFi entry into the market. And now we want to see a nice bounce from this EMA ribbon, right? Just like we had here, we consolidated sideways and then boom, off we go. Can we now have this next leg up? Can we now have this next leg up, break through 32,000, 32,600 as horizontal resistance, and then we start looking at the more exciting patterns, which is bringing us up towards 37,000 on this price target, right? That is what you really want to be looking at here, is this bigger falling wedge pattern. Let me just zoom this out to the daily chart so you can see it a little bit clearer, because obviously I've got the EMA ribbon on top as well. But look at that. That's the falling wedge. We break out to the upside. We meet our price target at the top of the wedge. But the extended impulse move gives your price target up to 37. And that's what we need to now start achieving. Even more exciting is this cup and handle pattern, right? Continues to be in play. When people wrote this out, when it was falling out of the handle down at the bottom here, you know, we had confidence. We said, guys, follow the technicals. And that's where the move started. And that is the difference between a good trader and a bad trader, right? When this was wicking out and trying to fake you out to the downside, look at this. It wicks below here and it wicks below here. You shouldn't panic. I mean, look at that move from where you were at the bottom of this cup and handle just to the neckline where we're at now. You're taking a 23% move. You take your profits, you reset, and now you look for the next trade on the clean bounce of this cup and handle pattern on the neckline, and you can start trading this all the way up to that 45,000 price target. And that's what we're looking for here on Bitcoin. So looking really good here on the Bitcoin price action. Not too many things to be worried about, right? Be patient. Don't chase green candles. I mean, if we do need to have a pullback, you can see the daily EMA ribbon sits at around 29,000. So even all the way up to this 29,000 level, I have no qualms. I have no qualms whatsoever. Worst case scenario, if we have no energy right now to break the level I just showed you, fine, come back to 29, no problem, collect some support, and this time you're going to go and do it. Because the momentum's on our side, we should be breaking this level very shortly on Bitcoin. And the move will be powerful. The move will be powerful because if I move again up to the weekly chart, and I'm repeating myself here, but many of you are new to this channel and have not heard what I'm saying. This fall here, all the way up here from 48,000 happened so quickly down to the neckline. So when we recover, I expect it to feel very quickly. There is not much resistance here because there was no support on the way down. So how can there be resistance on the way up? I expect that to move powerfully here to the upside. Once we clear this cluster could take a little while. But once we clear this cluster, I expect that to move nicely. And one further thing I do want to bring to your attention is there continues to be worries about inflation. I don't want you guys ignoring inflation. What are the risks? We think about the exciting things. We've got to think about the risks as well. Jerome Powell came out the other day, spoke about the fact that we could see consecutive hikes. He's trying to put the market back in its pigeonhole. The market started to loosen, right? The Nasdaq started rallying. We're now seeing Bitcoin going. Risk is rotating on. The dollar index is moving to the downside. And Jerome Powell will be sitting there going, oh no, I've not finished this job on inflation. I need to get it down to 2%. I don't want this market to loosen and 4% inflation start to become entrenched. Oh no, I need to finish the job. And so he's coming out quite hawkish, reminding the markets that I've got work to do. He can't let the markets get out of control. All the economic data came out positive, right? If you looked at the retail sales, if you looked at the GDP revised up, things are looking positive. And so that's why the markets want to run. It's just Jerome Powell keeping the collar tie around the market, say, chill out, you're not free to go just yet. And so the market is pricing in that the next FOMC meeting in about 26 days' time, we're going to get another 25 basis points, which is very interesting. 86% of the market is pricing that in. But then in September, that's where the market starts to split. 64%, still the vast majority, is expecting a pause thereafter, but there's so much time between now and September, we don't know how that's going to change. So let's focus on where we're at here. The market expects another 25 basis points, taking us to 5.25 to 5.5. So you need to keep this narrative in the back of your mind. If the FOMC, if the Fed, if Jerome Powell, or any of the Fed officials want to come out and shake the market, that could give us a downside move here. Also, inflation figure comes out today, right? The PCE inflation, which is the Fed's preferred measure of inflation, is coming out today. 4.7 last time out, expecting this to come in at that 4% mark again. So we're looking for that here on the core PCE reading later today. Make sure you're in our Telegram, Ijaz.uk/Telegram, or TG, sorry, to make sure you get the latest updates as and when they come out. No doubt when this does come out, it will move the market a little bit. And the question is going to be, will it aid us? Will it help us break through this neckline here on Bitcoin, or is it going to mean we get rejected back down towards 30? Either way, I think it's a matter of time before we break this neckline and start moving higher here to the upside. So there you have it, guys, a Friday update here on the Bitcoin markets. If you appreciate this type of content, make sure you smash the likes. Don't forget to subscribe, but also go and watch this video here, guys. Really important videos. I lost $300,000 in a single day. I'm going to give you the exact lessons I learned, and this video is being very well received with so many amazing comments in the comment section as well. Go have a watch. Let me know what you think about it. And as always, I will see you in the next one.